Good afternoon, everyone. Thanks very much for joining us today. I think there's been so much great insight from the previous panels. My name is Alice. I'm head of research at CoinMarketCap. Today, for this panel, I would love for us to discuss tokenization and market conditions. Truly, this is an all-star panel for crypto-native communities, but for the non-crypto people today, would you mind do a quick introduction?
Sure. Thanks for having me. I'm John Cahill. I run Asia for Galaxy Digital. We're a global financial services company and data center operator based out of the US, listed on NASDAQ. We have 55 people here on the ground in Hong Kong and pretty much do everything under the sun in crypto, from trading and investing to asset management to lending to tokenization and really all points in between. We also run a moderately large data center in West Texas. So happy to be here.
My name is Yat. I'm chairman and co-founder of Animoca Brands. We're proud to be a Hong Kong-based company, and we've basically really been known for investing in the space. We have over 628 portfolio companies, but actually we're builder operators, known for the launch of companies like Sandbox, for instance, or the Mochaverse, Open Campus. Headquartered here, global operation. Today, we're not a fund, so a lot of people confuse that. We invest entirely out of our balance sheet for the most part. And I think one thing that we very much believe in is the whole world will tokenize. We can talk about that later. And so our entire thesis is based on a world where everything is essentially tokenized, and that's kind of what we're trying to build towards to.
Oh, my name is Eugene Cheung. I'm the Chief Commercial Officer of OSL. So OSL also proud to be a Hong Kong-based company, but we are the first license exchanges in Hong Kong and also a listed company in Hong Kong. So we have been in this industry for almost 7-8 years as a license exchanges. So have been quite actively in terms of tokenization, RWA, especially under the Hong Kong regulatory framework. But we actually recently have been quite actively in global expansion. We're getting licensed in other jurisdictions as well because we believe the blockchain itself is global. So you need a right infrastructure and also the regulatory infrastructure instead of fully realize the blockchain's value.
Hi everyone, my name is John Patrick Mullin. Since we have two Johns on this panel, I'll go by my crypto name of JP. For this one. I'm the CEO and founder of Mantra. We're an RWA L1. We also have some of the only DeFi or on-chain specific licensing from VARA, which is the Dubai virtual asset regulator for broker-dealer, exchange business, and asset management. And we're in love with tokenization. That's what we do.
Perfect. As I mentioned, this is a great 360-degree panel, and we really get specialty from each part of the industry. And for the past few years, tokenization of assets has changed from a theoretical framework to actual capital deployment. And during that process, early adoption, there are so many achievements, so many products, so many lessons learned. Also, we did this at a different special time period where we gone from zero interest rate to now aggressive tightening. So I wanted to start from John, maybe because you speak to all the institutional clients. So when they first lean into tokenization, what has been some of the major drivers?
Maybe we do a little bit of a history lesson. I think tokenization really started with stablecoins and what Tether did as a risk-off alternative for people who are on-chain. And so it was really, the demand is driven by people who are on-chain, who've made a lot of money in crypto, who want to move value around without taking their money and going through the banking system. So that was kind of like the first thing. With low interest rates, getting yield was less important, and so having some kind of yield associated with your risk-off position wasn't as front of mind. As rates started to go up, as a response to inflation, you saw this demand now for yield. And so the early kind of appetite for tokenization was driven completely by the closed universe of people who are invested in crypto. And where we've seen that develop is more demand for a wider breadth of products. And so who gets interested then? Well, asset managers. Hey, we do distribution as a full-time job. We have lots of product under our umbrella. We need to start exploring what a tokenized version of existing products looks like. And that's been the major change in the last couple of years, is every major asset manager has either launched a product, and they start with money market funds because it's the easiest to understand. It's the closest to simple as it gets. And they have great distribution. And so I would say there hasn't been a huge appetite from the institutional traditional buyer for tokenized assets yet. But I think we align very much with the tokenization of everything story. We think the benefits of trading on blockchain, the efficiency you get from moving collateral and optimizing collateral using all these different types of assets will ultimately win the day. But it takes a lot of things to happen to get there. Some of it's regulatory, some of it's comfort with process, procedure, custody, and then the usefulness of the assets. If you own a tokenized money market fund, it's great for getting yield, but can you use it as collateral to back an exchange position? Can you dynamically move it? Can you trade it 24/7, 365, which is really what crypto is there to support? So it's still extremely early. I think directionally, it's never been a bigger bull market for this transition and this convergence happening, but it's still very, very early in that process. Ultimately, the consumer benefits because you get this composable, enormous universe of products that's replicating what you have access to in the existing world. And ultimately, hopefully, the end state is you have more access to a wider breadth of products once that tokenization convergence has happened.
Yeah, that makes sense. I think from what you described, I kind of sense that this is not something just cyclical, aka just driven by the interest rate environment, but rather something that is structural change that we can bring for trade funds.
To me, it's a mega trend. It's like the internet propagating. It's now in the age of AI being used all over industry. Again, nascent stages of what that looks like, and with a lot more runway behind it. But it is that kind of early innings.
Okay. And yet, from a more crypto native perspective, how do you think RW resonated with the crypto crowd?
Yeah, maybe I'll just sort of touch base on this. I'll get to the crypto natives, but what we're most excited about RWAs is really sort of tokenizing and creating a capital asset out of something that never had the potential to be that in the first place, right? So I think the reason why so many people in our industry and actually also in finance are excited about tokenization is not only because they can it's really about reaching new audiences as well. If I take my financial product and I tokenize that, I can actually reach someone in another country that wouldn't normally be my audience and be able to transact and do business with that person. They could be, a buyer of that asset at a fraction of the cost, right? I mean, if you think about even things like tokenized gold are starting to take off because someone else who might not be able to buy gold can potentially do that, right? So that's why they're interested. But what we're particularly interested in, where I think the growth of the space has been, is about a different type of RWA, which is either things that haven't existed before but have value, or are things that, or let me define that, but are actually valuable to these audiences to begin with. So we're probably most known for tokenizing video game assets, right, in the form of NFTs and tokens. And for most people in the finance world, they'll look at that and say, well, that's neat and everything, but I care about my bonds, my funds, and it's a relatively small industry. But I guarantee you, for every child that's out there and for everyone under the age of 30, their video game assets are valuable to them. They just never had the potential to trade them or do anything with it because the platform wouldn't allow that. And when you think about what was one of the largest on-chain onboarding of actual on-chain activity, I don't mean people who are trading crypto on like an exchange. It was in 21, 22, and what was it? It was NFTs and gaming. And the people who came in were not degens, and they weren't traders, and they didn't do it for money. They entered the space because they were fascinated about the ability to do something with an asset that they were already passionate about and that they loved, right? And then from that, they started learning about money. And here's the crazy thing. Many of them have stayed in crypto through the winter period because retail hasn't grown since 22, right? We know that already. So they stayed on chain, they continued trading, doing stuff, and now they're buying gold. Okay, right? 3-4 years ago, they were not buying gold, right? Their introduction to financial literacy and financial asset came from a point of passion, and then they evolved into something else, right? And I think that's actually the superpower of tokenization, because everyone in this room already is thinking financially. 90% of the world doesn't even understand what money and investment is. They don't have a portfolio. They don't get any of that stuff, right? Our children don't learn about money from school, and even if they study economics, it's questionable whether it teaches them anything about money to begin with. But they learn it about trading Pokemon cards, for instance, right? That's how they learn about it, right? And so that's the area that's exciting. Now, for the crypto natives, we've had a really rough year last year for many macro reasons. And I think the excitement, some of them are buying gold, they're diversifying in assets, sure. But I actually think the natives are much more, they're the ones in Africa or so on are excited to invest in asset classes they couldn't normally get to. But the actual natives that are sort of in the US and so on, they're actually sort of looking for sort of, I call them passion asset classes, right? So Pokemon trading, for Pokemon digital card trading in the form of NFTs is actually pretty big right now on chain, right? And a lot of people who are natives, and I classify them differently, Polymarket is a great example of a lot of people going on chain, but none of them actually know that they're on chain. None is the wrong word, but let's call it 90%. Right? They're trading and doing prediction markets, but they have no idea that they're doing stuff on chain. Right? And so that audience has not bled over in the rest of the space. So they're not thinking about RWAs or tokenization because Polymarket is not exposing that to them. In the first era of 21-22, we put our stuff in a MetaMask wallet, which was a little bit klutzy. But because it was in a wallet that I owned, I now could access into Uniswap, and I could trade somewhere else, and I could get some yield here, and I could put it into Aave. You could technically do that because it's on Polygon. However, nobody in Polymarket is thinking that, hey, the money that I'm making here, or most of them, I could actually move over to Aave and leave that there for some yield until I maybe start making a trade here, because it's currently built in a way that it's not intentionally interoperable, right? So I think that's the difference right now. But the real unlock is when all the people on those platforms start to realize, wait, those assets are on chain, and I could very easily buy something else. That is the unlock, and that to me is a growth potential.
That's amazing. I love how you describe the smooth onboarding of users via NFT and gaming period, and now to tokenized gold and RWA. It is, yes, the smooth experience for them takes a lot of effort on the back end for us. So I would love to direct that to JP because Mantra is the blockchain for RWA, and then compared with NFTs, RWA has more complexity when it comes to issuance, when it comes to compliance, liquidity. What has been some of the bottlenecks?
So just touching a little bit on what John said earlier in terms of the history of real-world assets. Before it was RWAs, everyone called it STO. And back then, stablecoins, I don't even know what the Tether market cap was, but it was tens of billions, maybe even less, to be honest, back then. And people were trying to tokenize stuff. And the issue was never issuance, right? People had all kinds of shitty assets that they wanted to try to bring on chain. And for a number of reasons, including liquidity, including compliance concerns, it didn't really actually work that well. So issuance has never been the problem. And even today, there's still a million people out there that want to tokenize something, thinking that if you bring it on chain, it's a magic source of liquidity, it's a magic source of internet money, and that they can find a broader audience to distribute their asset, whether it's shitty or not, frankly. So that's really not a problem. But when you come into actually issuing something legitimately, that's where it becomes a little bit more nuanced. So right now, even today, a lot of the RWAs that are being issued, quote unquote, are still done in some sort of opaque SPV structure, and it's not a native issuance of the asset on chain. And that's going to take some time because of compliance concerns, because of regulatory constraints, et cetera. This is something that I think will really be a big unlock in the future, but for the time being, frankly, the SPV model for most assets is probably okay, at least to get people having a taste of what an RWA looks like, how to get yield from it, how to make it composable in some sort of vault or lending protocol or what have you. When it comes to compliance, it becomes significantly more complicated. We're a regulated business. We spent nearly 3 years trying to get regulated from VAR in Dubai. And if you just look at the UAE as a market for regulation, you're talking VARA in Dubai, you have DIFC, you have DMCC, you have ADGM in Abu Dhabi, then you have ESCO, which is the federal regulator, and you have all these different regulators just in one particular country. And then you talk about EU and Southeast Asia and Hong Kong and Singapore, the US, et cetera, et cetera, et cetera. And it becomes immensely complicated because what works in one place doesn't work in the other. And to be completely honest, for crypto natives, that whole idea of compliance is a challenge. And in certain cases, it's also a design choice. There's certain protocols out there that do not want to implement KYC or AML for various reasons, and that's fine. But there's no way a regulator is going to go and say, hey, this is okay to have regulated in my jurisdiction if you won't have some sort of onboarding check to know that I'm not interacting with Kim Jong-un or the Jalisco cartel. So the compliance side is obviously a challenge. Embedding that into an on-chain environment actually isn't that technically hard, so it's ready today. But the coordination effort of having an asset issued in one particular jurisdiction be applicable to another one, that becomes a little bit more of a challenge. And then I think the hardest part right now is still the liquidity. Again, if you bring an asset on chain, it doesn't immediately make people on chain want to buy it. It doesn't necessarily mean that there's going to be massive deep liquidity pools. It doesn't mean that there's going to be a secondary market for these assets. In many cases, there's no secondary market. And even in lending markets, people don't necessarily want to borrow against it or lend against it or whatsoever have you. So liquidity problem is definitely one of the biggest challenges that we're facing. It's increasingly getting better. I mean, even just this week, you saw Securitize announce that they're taking BUIDL, which is the BlackRock money market fund that's held natively on chain, issued natively on chain, and going to be allowing to have that traded via an RFQ system on Uniswap X, which is a permissioned protocol. That's a start, and that's a good thing to see BlackRock coming on chain and trading something, but it still is a long way to go, and that also goes to show that it's just the tip of the iceberg on these things actually getting true liquidity behind it. And frankly, just by BlackRock putting this product on Uniswap permission pool does not mean that the spigots are going to open and we're going to have this massive source of liquidity coming in. We need to figure out other ways to make them composable. We need to figure out how to make looping easy for these assets, how to make lending against them easier. So all this stuff is going to take a significant amount of time. And truly, I think it isn't a technology issue. It isn't a supply side issue. And it isn't even really a demand issue, but it's a coordination issue, in my opinion.
I just want to put in a little plug for Galaxy because we did, we're listed on NASDAQ, but we took the view that at some point you got to eat your own cooking, and we tokenized our equity through the front door with kind of SEC blessing. There's a white paper on it. It doesn't trade anywhere because we don't have those rules in place for the US, but there's a path through the front door, natively issued, with a transfer agent and all the bells and whistles and the exact same rights of ownership as owning a stock. And so when people go to the SEC and say, how do I do this? They point to the Galaxy white paper. And so there are ways that are happening. We need more reg to kind of define roles and responsibilities, to define taxonomy, at least for the US. And we need harmonization of some of those rules around the world for that access to open up. There's a lot of issuance that's happened in wrappers and the SPV type structures. That's an intermediary state. I think the end state is something that is natively on chain. That ultimately wins the day, but we're still a ways away from that.
Yeah, excellent. I think that truly sets an example of what it could be. For traditional asset managers, if you wonder why we are talking about RWA and why we are so excited about it, because we want to bring additional liquidity, additional participants, additional assets into traditional markets. So in a sense, I wanted to direct this to Eugene because from a regulated, exchange infrastructure perspective, how do you think RWA really increase the liquidity for the assets, or did it expose how thin it is? And also, because RWA allowed you to trade 24/7, do institutions really want 24/7?
So I think the way how I look at this, right? I mean, I think the RWA term, wherever, what we really see fundamentally change is actually the financial infrastructure itself.
Yeah.
So I think that's the most important thing, right? Because today, I mean, there's a lot of people. I think there's a lot of people. So I'm probably youngest, but this is my 5th years officially in the crypto space, right? So I think the biggest difference first is people today people stop. I mean, the good thing about the bear market is that people start talking about crypto price. People start talking about which meme token I want to buy. People start talking about technology itself. There's a lot more discussion, of course, stablecoin and the privacy chain, right? Why people talk about privacy chain? It's really because privacy chain is able to facilitate more institutions coming to the market, right? The bank, the financial institution will have a more compliant way to use chain to facilitate trading. So I think that's the direction going. Then the more institutions are going to come, and then that will help the liquidities, right? So one thing about OSL, what we've been doing as a compliance license exchanges, honestly, it's very hard for us to compete with Binance, with Bybit. I worked for Bybit before joining OSL, so I know it's impossible for us to compete with Bybit on the retail. right? Because today I only can list free tokens face to retail, BTC, ETH, and Solana, right? So Bybit, when I joined Bybit, we basically list maybe can list 10 token in one day, right? So it's a very completely different story. But the good thing about being a compliance exchange, I'm able to talk to bank. I'm able to talk to security firm, right? I work with Futu. I work with all the major security house. And then we talk about how they're able to use blockchain to create a new asset management product so that they can distribute to their high net worth client. I think that's actually quite important, right? That's actually, it's not about like really, okay, you make this thing tokenized and then everybody want to trade it, right? A lot of people want to say, oh, I want to make the real estate tokenized so that I can get more extra liquidities from the crypto people. People have a wrong idea because everybody thought like crypto people, they're just very stupid and then if they can trade Trump token, why they want to buy my real estate token, right? So yeah, I think they have a wrong impression about the crypto people. But they don't care about the real estate token. They care about the volatility, especially from retail perspective. And then one thing is like if you really go into market and then you have to understand like how the technology in the traditional financial infrastructure is so left behind. We're working very, very closely with a lot of fund manager, right? We want to use API. So sorry, we don't have API. If you want to do any like a fund redemption, please send us an email, right? Last year, we actually asked for send me a fax. Now we improve use email. So I think for the tokenization, we are gradually improve this kind of a process. We make it more efficient. Today, we're not even talking about liquidity. We just want to, okay, if today I have a money market fund, how am I able to use blockchain so I can do instantly redemption? I can convert my stablecoin into money market fund. And then when I need a stable coin, I can convert right away. Actually, today, in the most compliance way, traditional financial way, you cannot do it. At least you have to wait for, most of the T+1, at least wait for 9 hours, right? I think that's the change. And the last observation I found is quite interesting is also about how able to change it and then the whole financial system, okay? So before I joined crypto, actually I worked for CME. CME has been in the industry for almost 100 years as exchanges. I think basically say that why nobody able to compete with CME? Why there's no other exchanges can provide better technology, better product than CME, right? I mean, I always ask myself these kind of questions. But then these days, that you see the Binance, Coinbase, those new exchanges all come up, right? We all know the names. But in the last before the crypto space, there's no other really big name as a global exchange come up. It's right. It's just like okay, there's a CME, there's a Eurex, that's it, right? And one observation, probably you guys don't know. Today, on all the crypto exchanges, the #1 trading perp is actually gold. It's no more BTC. I was talking to market maker, and the market maker said they actually provide more volume on the traditional stock pairs than the crypto these days. So that's another observation. Potentially, Binance or other exchanges, of course, there's also combined, maybe Coinbase, will be the next CME because they have a better system to help people trade perps, right? So when you talk about RWA, I'm actually more focused about like how people can trade financial product in the most efficient way, lower cost way. I think that's the future.
Yeah, and that's an excellent point because that shows the appetite within the crypto community for traditional assets like this. And to Yat's point, I think the whole industry, we have saying the power of the community when they want to trade something, when the narrative is there, it really takes off. So for us, we're looking at 2026. This is the year for RWA, if it didn't already start already from 2025. And just quickly mention here as well, at CoinMarketCap, relate to what JP mentioned, we were trying to do this at the fundamental infrastructure level. So we have a tradable crypto index called CMC20. It is a DeFi product. If I think that would be quite an interesting example, similar to Galaxy's tokenized equity as well, for us to explore the appetite and use case in this industry. All right, for the last part, I wanted to just go down the line here. What are you most excited about within RWA and in this market in 2026?
Crypto pricing is one thing. We are in a raging bull market for infrastructure. There are hundreds of projects lined up to do more stuff. Every asset manager that is managing material money is moving this direction. It's an efficiency story. It's an access story. And it's not a story. It's real. It's happening. It's tangible. Every bank, regional banks, big global banks, have serious programs. They're hiring real people to bring more and more assets on chain. I think Yacht's view into the world is interesting because it's a whole new untapped market. It's a brand new green field for financializing things. I can't be more bullish about the direction of how tokenization is happening. Some of it's slow and painful and involves regs, but directionally it's only one way.
Yeah, the thing I'm most excited about is basically the agentic future, basically AI. If you think about the infrastructure that's going, the last 6-7 years, when we were developing this sort of Web3 as a read-write-own narrative, those were the POCs for essentially what we see today for RWAs and for agents. When we were involved in CryptoKitties back in 2017, Ethereum, I think, had to handle $40 million of sales, and it crashed Ethereum. Okay, 40 million, and Ethereum went on its knees. Those were the lessons we had to go through for years and years today, where you now have a scaling infrastructure between Ethereum, between the L2s, between Solana and all these, where you can now basically settle billions instantly, pretty much, without actually having to worry about all that. But it's not even about, and then again, Polymarket wouldn't have been able to be built if it wasn't for blockchain, right? There's a financial infrastructure that's available for everyone to build and compose on top of. So that's exciting. But who's going to be transacting 24/7 the whole time? It's going to be AI agents. Every one of you is going to have at least one. You're probably going to have dozens. I have like dozens myself. And it's not just about trading. It's just they're going to do things for you in your daily life, but they're going to have a wallet, and they're going to do stuff for you. And they're going to do it with a sovereign asset that they can ensure is theirs. They're not going to do it through a Facebook API. They're not going to do it through a Google API. They're going to want to do it in something that they can control and that is guaranteed. And I think the other thing is about onboarding. So, and what we launched Animoca Minds is essentially an agent in this manner. It's not OpenClaw, but it basically functions in a way where, my mom can now buy crypto if she wanted to, because she can basically just tell the agent to say, oh, I want to buy some gold, I want to buy this. It's all on chain. It's not an exchange. But she can now do that because it's a better interface than MetaMask, where you have to sort of, and again, MetaMask is fine, but you're just unfamiliar with it, and it's weird, and it's just uncomfortable. It's for the early adopters, the sort of innovator stage, right? But if you want the mass to go in there, it has to be convenient. And what's more convenient than talking to someone in the language that you already know, right? So, but they're going to be buying assets to the final point that they're interested in. And so this comes to my other point, which is, my mom's 81 soon. She's never going to buy Bitcoin. She's not interested in that, right? Bless her soul. And she's also not going to buy gold because she doesn't care about that, right? Because she's an artist, right? But when we tokenize the Stradivarius with Galaxy, she's interested in that because her interest is music. And she values the Stradivarius. Most of them here won't care about what that is. However, she does. But she doesn't know anything about money. And she's now going into a world of finance because she's appreciating that there could be value, but she couldn't afford one herself. But now she can afford one that's maybe fractional in value in that sense. And that was the gaming story as well. And that's the trading card story. And that's basically the story how most of us learn about money and then come into the space. And that to me is how we bring billions of people who are financially literate on chain. That's how we change things. Right now, RWAs trading with existing assets are cool, but it's the same 5 to 10% of the world that we're trading with each other. It's an extension of everyone in this room, and I like you guys, but we need billions more in the space to make a difference and to make the world better as well.
So we're definitely excited about, of course, it's institution adoptions. Just back to the previous point, the financial institutions were adopting blockchain as their settlement layer infrastructure. I mean, these kind of things, once they start switch, you cannot go back. We believe it. Right, we talk about like 600 trillion financial asset in the future can be trade, settle, everything on the blockchain. And before those assets become on blockchain, they cannot be programmable, right? The AI cannot use that. So I think it's very important to bring it on the blockchain. But the biggest we think gap right now is still KYC onboarding, but my financial onboarding. So although everything looks like we talk about blockchain, but today, as an institution onboarding on a compliance exchanges, is still a dinosaur age. We're basically collecting paper, right? Retail is very fast right now. You can do the face, but right, John, know, right, when you try to onboarding even Bybit, right, it was
It was a challenge.
it was 2 years. I mean, basically, so I believe there's a lot of people working on that. How to use the blockchain to solve the KYC AML with a better way to onboarding an institution, right? I believe if that problem really solved, it will definitely accelerate the institution adoption. It's going to be more financial bank, everybody going to using blockchain as the settlement layer.
I'll be quick. I'm excited about two things. Number one, the Monter comeback story. We've been grinding. Number two, the purpification of everything, particularly on-chain regulated purpose venues. I think that's going to be the future.
Excellent. Perfect. All right. Thank you very much, Luna PR, for creating this stage. And a big thank you to all the guests here today as well. I hope everyone enjoyed this discussion. And yeah, thanks.